Hi everybody, this is Gary Dean with Sentiment Timing, and this is a brief tutorial about our predictive analytics model. Now, predictive analytics is the practice of extracting information from existing data sets in order to determine patterns and predict future outcomes and trends. So the way our predictive analytics model works is we use time, sentiment, and technicals. Now everybody's looking for an advantage in the stock market, and there's numerous of other ways that people use to predict what the pattern's going to be in the stock market moving forward. We don't believe that using just one parameter works. We think that the more data sets that you put into your predictive analytic model, the better outcomes you are going to get. So what we use is time, and time, W.D. Gann, who's considered one of the best market timers in the world, says that time is the most important factor in determining market movements, and by studying the past records of the averages or individual stocks, you will be able to prove for yourself that history does repeat, and that knowing the past can tell you the future. There is a definite relationship between time and price. So Woody Dorsey, nationally recognized stock market investing pro and supplier of investment forecasts to major Wall Street financial outlets for the past 40 years, has been studying time in the stock market. And he is considered by many on Wall Street as one of the best market timers in the world, and he is a pioneer of trader psychology as well as investor sentiment. So Woody uses 13 different timing indicators to determine when the S&P 500 will make a top or a bottom. He uses this both on a short-term and a long-term basis, but we primarily focus just on the short-term, anywhere from 2 to 6 weeks. Often these dates are put out weeks in advance, sometimes months in advance. Now, in our recent reports, he gives a long-term forecast as far as when the market is going to make a true bottom. But during that time period, because the lowest that he has set forth is 2022, there's going to be hundreds of different patterns that take place during that time frame. So even though the overall trend is believed to be down into 2022, you can trade both up and down hundreds of times by the time that low actually hits. So knowing when to expect the market tops and bottoms allows one to adjust their portfolio accordingly with stops or positions in the opposite direction, because when the market reverses, the majority of the gains are made in the first few days because nobody really believes that the market has reversed and the trend's been going in that direction. So when you're able to position your portfolio in the opposite direction, once momentum picks up in the direction that people realize that it reversed, you just kind of enjoy the ride and make profits until the next time period's coming into play. Knowing when to expect the market to make a top or a bottom removes emotions from your trading, and by doing that, 99% of your emotional trades will have you doing the exact opposite of what you should be doing, and that leads us into our sentiment time period. So with the sentiment, what basically that is investor sentiment is how traders feel about the current state of the stock market. All tops and bottoms will almost always be accompanied by extreme bullish or bearish sentiment readings. Woody Dorsey considers sentiment as the missing link of trading. Not many people understand sentiment, nor do they know how to trade it. Knowing how traders feel about the current state of the market gives a trader an unfair advantage that many people do not know even exists. So if you get 3 or 4% of the traders out there that know what investor sentiment is, or even more how to trade it, that I think that will be a lot, because there's not many people that really understand how sentiment works. Woody Dorsey is considered a pioneer of trader psychology, investor sentiment. Investor sentiment, the hidden market timing tool nobody understands, but it can change the way you view the markets forever. forever. And if you notice on this chart, this is Woody's sentiment chart, people are always getting bullish or bearish at the exact wrong times. They may be right for a couple candles, but eventually what happens is when you start positioning your trade when everybody is getting bullish on the market in the opposite direction, you get very fast moves. And when you get people that are everybody that's bearish on the market and you're looking up and you start to layer in positions, you get massive moves to the upside. And that's pretty much exactly how institutions trade the market. Is they take the when you get the thrill and the euphoria, this is when they start unloading their long positions and start putting short positions in place. The retail public is buying up here because the media and everybody is telling them the market's only heading higher. So when it starts dropping, all the people that missed this entire move are now buying the dip. And then when it keeps going, they start getting fear, desperation. And once we get into the panic end of things, this is when institutions will start unloading their short positions and start building long positions. And this cycle repeats over and over. And that is typically what we look to trade with sentiment timing. But the last aspect of this is the technicals. So we know we have time, and then we have sentiment. So once they are both looking in that direction, what happens is you start looking for technical reasons to buy, and those are bullish or bearish divergences. And then once support holds, once a buy trigger hits, you take the long position and then put a stop in place and you ride it. So this is the current market right here, and we made the low at the 25.88. Once we got above this 26.20, that was the buy trigger, and the stop was back down here. So we almost got stopped out, but what happens is it held, and now we're moving up, and we're at the bull bear line, where if the bulls push through it, there is going to most likely be a quick move up to the 2700 or 2704. So we're positioned on the long side down here, and all we do is have our stops in place, and we could actually move our stop up to the 2640, have zero risk in this. And those are really the types of trades that we look to get into, where we have less than 0.5% risk as far as on when we put a stop in place, but the upside could be anywhere from 3 to 4% or higher. So this is the pattern, the current pattern in place that I showed members, where I believe that we are just making a series of ABC moves, where we have an ABC of an A, we have an ABC of a B, then we came up, made another B and a C down. So the way that this was an ABC of a B, and now we're coming up, and if you notice with this channel, it's almost measured perfect. So this move is predicting that we could see the S&P get somewhere up into the 2790 area, and being we are long down at the 26 between the 2614 and the 2630, depending on when people got into their trade, you know that that's a fantastic trade. I mean, anytime you can make 100, 150 or 200 points on the S&P, in my eyes, that's a fantastic trade, especially when you were only risking less than 0.5%. So we have a couple turn dates that are coming. We are not in the acceleration phase, so I believe that we are going to see some choppy markets. But once we get past the next low date that is scheduled, from there, that's when it's going to be a sustained rally, and we'll be able to run this and most likely start hitting some of the upside targets and closing the gaps that I've been watching for quite some time. So if you're interested in trading the markets in this type of style, where you're using time, sentiment, and price, three different indicators in our predictive analytics model, we have some upcoming turn dates that you want to know, because I believe that a lot of people are going to be jumping on the long side. Most likely it's going to be at the exact wrong time. We have a couple specials going. One is $2.99 for 4 months. Use coupon code 2994M, and the next one is $99 for 45 days if you just really want to test the waters. But during those 45 days, there's going to be most likely two different turn dates, one low and one high. So you want to keep an eye on that. That you can do it for $99.99. Just use coupon code 9945. So with that, enjoy the rest of your day and have a great night.